You're welcome back. If you just joined us, you're watching Business Incorporated on Channels Television. Airbus and Boeing have raised their long-term forecasts for new aircraft demand, betting that rising wealth in Asia would continue to boost air travel and offset any short-term hits to the global economy. The world's two biggest plane makers also announced a flurry of multi-billion-dollar jet deals at the biennial Farnborough Air Show, which opened on Mondays 45 miles southwest of London. And Fitch Ratings has affirmed the usual default ratings of 8 Nigerian commercial banks and affirmed the viability of all the banks. However, the long-term foreign currency issuer default ratings of First Bank and UBA Group was downgraded to B from B+ with a stable outlook. The global rating agency downgraded the national long-term rating of FBN Holdens to BBB+. Fitch Ratings also cut the Bank of Industry's long-term issuer default to B+ from BB- and support rating to 4 from 3. The latest Fitch report expects Nigerian banks to remain profitable in 2016, despite slower asset growth and higher loan impairment charges. And the Assets Management Corporation of Nigeria has commenced proceedings at the Federal High Court in Lagos to wind down MRS Holdens Limited for failure to repay an outstanding debts of 81 billion naira. AMCON explains in a statement that it's asking the court to allow the company into compulsory liquidation over an agreement with MRS in February of 2014 to restructure the debt, which then stood at over 74 billion naira. AMCON alleges that in the agreement, MRS agreed, among other conditions, that in the event of a default, all concessions granted under the terms of settlement will be revoked at the discretion of AMCON. MRS Holdens is one of the major players in the downstream sector of the oil and gas industry in Nigeria. And the crude oil market has been volatile in the past few weeks, trading below $50 per barrel. Now, this morning, Brent crude was at $46.39 after trading down at $46.33 per barrel. A number of reasons have actually been given for this rise, and one is the interruption of Iraqi crude loadings at Basra. Now let's get more perspectives into the happenings at the crude oil markets as a senior investment officer at the Financial Derivatives Company Limited, Ada Akonobi, joins me on the program. Ada, welcome to the program.
Hi, Bolaji.
Now let's talk about oil prices, especially in the international markets. What factors have been affecting the black gold? One, like I mentioned earlier on, has to do with the issue of loading Iraqi crude at Basra. The interruption in that exercise is pushing prices to the upside. What's your take?
So what we're seeing now is that a lot of traders are losing confidence in their price rally, and what they're doing is that they're shifting positions from long. They're shifting positions from long to going short because they anticipate further a decline in oil prices. And like you rightfully said, there are a combination of factors that are leading to the recent decline in oil prices. The supply side. The U.S. production is, despite there's a marginal reduction in U.S. production, there has been a consistent increase in oil rig counts, and we know that oil rig counts is a proxy for exploration in the region. And we have an OPEC report for OPEC's report for June anticipate that production will go up by about 0.7%. So there's that sentiment that there's now more oversupply and there's waning demand. So that is why the market is beginning to take that into consideration and factoring in all these factors.
Asia has been in the news regarding its slowing economy, and one of the world's biggest importers of oil, that is China, is actually recording a drop in imports, as other Asian refiners are also cutting down on crude. How has this impacted on oil prices?
So now, as I've explained from the demand side, as I've explained from the supply side, I'm going to look at the demand side as well. Chinese demand accounts for 13% of total oil demand, total world oil demand, and most anticipate that the GDP growth for China in Q2 will actually contract further to 6.6%, as opposed to 6.7% in Q1. And we know that literally sends a negative sentiment that the region is actually going through an economic slowdown. And if they actually depend heavily for oil and they're going through economic slowdown, that means demand for oil, demand for the black gold will actually wane in that region. So that is actually affecting prices as well. Crude imports for May declined by about 5.7%, and analysts predict that even in September Q2, demand for oil in Asia Pacific will decline significantly. And the strengthening to the US dollar is contributing to the fall in prices. The US currency has gained about 0.5% against the basket of other currencies. So that is, there's an inverse relationship between oil and other commodities and the dollar. So that means if the dollar is stronger, holders of other currencies will find that commodity quite expensive, and they'll stay back for a bit. So basically, the market is seems like the market is now taking into account the fundamentals, and they've shifted from the political sentiments that was driving prices higher previously. But going forward, I still expect oil prices to actually maintain its very strength. The UK is looking to reduce interest rates sometime this week, and that will literally make it cheaper for oil explorations in that region will actually come back up, which will contribute to the oil glut that we have at the moment. And Nigerian production is going back up. Libya is looking to increase production. Saudi Arabia is looking to increase production. In fact, Russia's production has actually gone up 1.1%. So that sentiment of oversupply and waning demand is actually what is driving prices, and I expect this trend to carry on until any further shifts.
All right, thank you so much. Thank you so much, Ada Kunobi, Senior Investment Officer at the Financial Derivatives Company Limited. The International Finance Corporation invests in OIS Indorama Port to help Nigeria diversify exports and generate foreign currency inflows. IFC, a member of the World Bank Group, has announced a $73.5 million loans to OIS Indorama Port Limited to support the development of a multi-purpose port terminal at Onne in Port Harcourt, Rivers State. It will also serve as a platform for direct export of fertilizer to foreign markets. The project is expected to generate critical foreign exchange and help the country diversify from dependence on crude oil exports. Indorama Port is located at Onne Port, about 16 kilometers southeast of the Eleme fertilizer plant. The interbank foreign exchange market opened today at 282 to 282.5 to the dollar. Let's cross over now to see how the figures look at this time. Uyi Ohehe, a forex trader at Diamond Bank, joins me to discuss happenings at the markets. Uyi, welcome to the program.
Thank you very much for having me today. Good afternoon.
Good afternoon. What's the Naira trading at now after opening at around 282 to the greenback?
Thank you very much. The Interbank market, which opened at 22.5, are trading actively but relatively stable. Currently, we saw some injection of liquidity into the Interbank market by the bank through some primary market dealers. So at the moment, the market is currently trading at 22 figure at 22.5.
Okay, I guess we've lost Uyi there. Uyi is a forex trader at Diamond Bank, talking about the forex markets. We'll go on a break. We'll be right back.